Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, July 9th, 2020. What we're going to do in this video is take a look at various commodities. That'll include hard and soft commodities. So we'll look at, I'm going to start out with crude oil, natural gas, and we'll move on to the agricultural commodities, and I want to touch on at least one industrial metal. I want to look at copper. I like to cover gold and silver and platinum, palladium, the precious metals. I like to do that in their own video. They kind of do their own thing. And even within this commodities arena, some of these commodities have a high correlation, like wheat and corn, for example. Others have absolutely no correlation or even an inverse correlation. So I'm going to start out with the stock market only because that segues into crude oil. Crude oil has been trading largely in line with the stock market for quite a while now. And here you can see that relationship here. In white we have USO, that's a crude oil ETN, one of the more popular, does a pretty good job of tracking crude, and then in green we have SPY, the S&P 500 tracking ETF. So this goes back to 2017 here, and you can see when you're looking at this relationship, they're not starting at the same point. You want to see the trends. When one's going up, the other's going down, and vice versa. And that's simple because if the stock market's rising, that's typically on current and future economic growth, both the current growth and expectations going forward. And then when this is a stock market, when the stock market falls, so does crude, and vice versa. So the correlation there is unmistakable. There are periods of brief disconnects, but as you can see, they tend to rise and fall together. So now that we have that said, one of the takeaways from that is if you're going to trade crude oil, or you're going to trade the stock market, or more importantly trade both, is what I should be saying, then you need to be aware of that relationship. Because if you are long crude and you're long the S&P 500 and the NASDAQ 100, both at the same time, you're either going to be right on both most likely, or wrong on both. So although technically you're diversified, you're diversifying among two highly correlated assets, so you're not really as diversified as you think from that aspect there. All right, and the thing about crude is you tend to get more bang for your buck. When it goes up, it tends to rise more than the stock market. When it falls, it tends to fall more in percentage terms. So let's look at a few charts. We'll start out here with NQ. I posted an update earlier, hit on the broad markets. I've been posting quite a bit of coverage lately. So as far as the daily charts, 60-minute charts, things to watch for, I've covered that. I don't want to spend a lot of time, but I haven't updated the NASDAQ 100 recently. So here's what I'm watching. You have this trend line here. We've been inching our way higher, putting in divergence from this point right here. You can see the negative divergence started to form. We had a little correction, continue to push higher to extend the divergence. So at this point in time, we have divergence that's about equal in scope as this divergent high back here. And the same thing back then. You had these little series of mini divergences within there with little mini corrections that led to one larger divergent high, an extension of that same divergence. And then finally we had a pretty decent drop down there. And before that, this was our previous divergent high, and we had a pretty decent drop. So I don't see any reason why these divergences won't play out for something similar, maybe along these lines right there. Let's say 10-107. Now again, I'm using this mainly to align with my analysis on the crude futures. That would be a drop to get to that target about 5.5% or so. And let's flip over to crude futures. Okay, this is CL. I'll get to USO in a second for those of you that don't trade futures, but I wanted to start out with CL. This is a 30-minute chart. This is the one I've been highlighting for the past several weeks, and I've pointed crude out as an objective short entry because it's at resistance, both not so much here, you can't really see it here because I'm only going back 1 month, but on the daily chart and the longer term charts, crude has been bouncing up along resistance here. And it had a similar posture back here. We had negative divergence at that point with an uptrend line. There was a sell signal right there on crude, and before all is said and done, it had a nice drop. And again, you get more bang for your buck. That drop back then was 10.5%. So you're going to have, if you get the call right on the pullback, more than likely you're going to do better in performance terms shorting crude than you would shorting the market. Cuts both ways, so if you're wrong and it goes up, well, you're going to lose more. How do you manage that position? You just take a smaller position size than you would on, let's say, the S&P 500 or NASDAQ 100. So that's it. Look for these divergent highs, divergent lows. We had a divergent low there, divergent low there, pop, pop. And we've been extending these divergences, and they've started to really steepen a little bit here with this most recent high. So the same story, crude's kind of bouncing up along that resistance level. We had most recently this trend line break right here, and pretty impulsive drop down after that broke right there. You can see trend line broke, took out 40.51 in one fell swoop, took out that 40.07 support level, kissed that 39.48. I believe this level's been on this chart for a while. This is today. We bounced so far in what may be flagging action. So if the NASDAQ breaks down from that pattern I showed you there, breaks the other trend line, then most likely crude is going to continue on down to the next target here, about 39.60 from where we're at right now. That would be another 2.5% drop. Before all said and done, I think a swing down to this level, 37.62, is likely. And that would be about a little north of a 5% drop, again, from where we're at right now. As far as objective entries go, well, goes back to the indexes. Look at the S&P 500, look at the NASDAQ 100, and so the next time we break those support levels, or I think today's lows will probably do the trick. Same with crude. I can tell you crude in a vacuum, taking out today's lows, will have taken out that 39.50-ish support that we fell to and bounced off of today. Quite a few reactions in the past there, and so that then should open the door to those next targets there. And bigger picture, this is what crude looks like on the daily time frame. Nope, weekly actually. These are weekly candles here. Let me color this up here. Grab a drawing tool. And what do we have? Most recently, we had an extreme oversold reading in crude oil. This was the most oversold we've been since back here in early 2015. At that point, we put in a series of lower or higher lows there on the indicators, put in a big divergent low, and that led to that rally. We didn't have divergence this time around. This was a meltdown from the COVID panic, and we've snapped back. But most importantly, as I mentioned, crude being at resistance on the daily, we have that big gap right there, very significant, and that's what I've been highlighting for a while. We've been bouncing around the top of that gap. Just above the gap right here at this level, we have a pretty darn good resistance level. It was support back here, finally broke down, recovered it, snapped right back above it, support, multiple tests, and then when we broke it there, we didn't just meander on down, we had a waterfall sell-off. Shows that was a significant level. And the old thing in trading is it's pretty simple. Support once broken becomes resistance, so there's no guarantee that crude will stop there, but I think the risk reward favors being short here versus long, with a stop somewhat above that level. Crude's volatile. You may need to give it a little bit of room, but again, we already had a sell signal now on that 30-minute chart like I showed you, so that put crude in at least now in a near-term downtrend correction mode. We'll see if there's more downside. Going back to that chart, I think there will be. There, that's that crude 30-minute chart of CL. Typically corrections don't end like that. Usually there's, kickback rallies and then more downside to come, just like you had here. And USO, the past few weeks I've covered this chart. This is that same old gap right here, the big old gap, top of the gap. I've been highlighting as objective shorting opportunities. Divergent high there. There was a drop. Another divergent high, and divergence itself is not a sell signal, but you can objectively short a rally into resistance, and you can also objectively short or add to a short on a break of uptrend line support, or a trend line, or any type of price support. And so you had a couple pullback trades there. Nothing big, but again, this is what swing trading is. You can take that. That was about a 10.5% drop. This one was a little less, but still worth taking a shot at, almost 7% there. And here we are at the same level. Let me give you a trend line to look at right here. This is comparable to that trend line on the 30-minute chart that was broken today. And I would probably, that's a little bit, remember, this is a USO. It's an ETN that's trying to track crude futures, does a good job, about as good as any. There's one out there too for those of you that some of the brokers now will block you from doing like interactive brokers won't allow ETNs and IRAs anymore because they don't want to deal with the K1s. In which case you could trade this one, OILK. I noticed this one recently. It's the ProShares K1 Free Crude Oil Strategy ETF. So most of the other ones like OIL and maybe that's the old OIL. There used to be one, haven't traded in a while, OIL. Yeah, okay, so they must have retired that and then morphed it into this ETF. OIL was an ETN just like USO, and it's those ETNs that typically kick out the K1s tax report because they're partnerships. Anyways, let's see here. You have on the daily chart, same thing. You can see there's a big gap, USO bouncing there. And again, I like to use this one. It's been around, it's pretty liquid. And downside targets, well, there they are. About sharpen that one up a little bit. Call it 27.89. Maybe a little flagging type action going on right now. So if the market's take another leg down, or sometimes crude can do its own thing. It can disconnect. There's your target. First target, second target here. I'm going to add one more line for you active traders. There's definitely some support around right there. And again, you've heard me say it once, you heard me say it 1,000 times. Whether or not you trade futures, I think it's a good idea to, if you're really serious about trading USO or any other commodity or ETN or ETF that tracks a commodity, then you want to look at the commodity futures to help confirm your entries and exits. And so if you don't have a futures account, most brokers in a TD Ameritrade I know gives free real-time quotes and charts on futures. Investing.com, you don't even have to have an account with them. You can get real-time charts on the futures, so you might want to watch those. And so therefore, if USO was falling and you were targeting, let's say 27.13, but you got to 27.30 or a little higher, and you saw the futures hit support, a pretty good support level where they're likely to bounce, that's where you may want to cover your position. Another ETN in the commodities arena is UNG. That's natural gas, tracks natural gas, does a decent job. Remember, a lot of the leverage ETNs have been either retired, the 3-time leverage, or be careful there because some of those have been having issues with the market volatility in the past several months, especially after the big drop into the March lows. So UNG story is that one broke out. It was highlighted recently with this divergent low downtrend line. It broke out and doesn't look like much here, but from the breakout, it's rallied so far about 10%. Pulling back now, I'll show you the 60-minute chart of NG natural gas future. But before we get to the 60-minute charts, let me show you my daily chart here. Stock charts uses the symbol $sign and nat gas, and that's the continuous contract. They just splice all the futures contracts together and give you a history of how it's traded. And like I pointed out recently, pretty good stuff here. This is we're right off multi-year lows, or coming off multi-year lows right there. That was the low in 2016. We went slightly under that. And simple stuff, no guarantees here, but this is a nice positive divergence, bullish divergence, and it's had a pretty nice rally off that 150 mark so far. Kind of basing here in this little range, if it can pop that. And again, the divergent low, last time we had a divergent low, rallied, well, it was only 34% just to that first target there. And then it pulled back and it went up even more, whatever that number is. Divergent low, 30%. I went over this before. This is a big rally there off that divergent low. So we could be looking for something along these lines right there. In other words, this could be the early makings of a new uptrend right now, being that we've put in the divergent low here. And again, I don't think these divergences have played out to their really what they're projecting as far as a move goes. Targets at this point, I'm a little adverse to listing targets. It's more of if you're a swing trader, trend trader, kind of let it run, keep your stops in place, and maybe periodically raise stops or along the way. But it may struggle here if it can get up to the top of that recent consolidation area. But if it can pop it, it could run from there. Another one I like is a potential bottoming play, longer term swing or trend trade is sugar. This is the sugar continuous contract here, $sign sugar. and it shows this is a weekly chart. So we're looking at a long-term chart, goes all the way back into late 2002 here. So we're looking at decades of trading history on sugar. And what stands out to me, or has stood out to me for a while, is this support zone right here. Other than back in the early 2000s, since then, sugar has pretty much found support around this zone right here, about 10 cents to 11 cents or so, particularly in recent years. You can see right there, right here we had a little whipsaw. So you have a reversal off support, especially after a brief breakdown below that level. So there could be a bear trap right there, or a whipsaw signal. You also have, you had divergence right here. It was highlighted back at the time. You had a bullish falling wedge, divergent low, broke out, and it rallied all the way up to that point after that first pullback. Went like this, up, wave down, corrective wave, and another wave up. It's come back in, and the divergence has only been extended now, setting the stage for a much more powerful rally. So, I still think the risk reward on a lot of these ag commodities is infinitely better than the stock market. No, doesn't mean the market can't go any higher. I'm just saying the risk reward, the downside potential in the market compared to the upside potential is much higher. Whereas in these commodities, they're pretty much beat down. They've been in a multi-year bear market as it is. They're down towards like a lot of them at long-term support levels and with constructive charts. So last time we had positive divergence was right here at this low, and that was just to give you an idea how much these commodities can run, even in a bear market rally, which is what this was here. That was 137% rally, and it was less than a year. It was from about August 2015 to October of 2016. So there you go. We could be looking at something like that again, or possibly maybe the next bull market's around the corner in a lot of these ag commodities. Who knows? Time will tell. Okay, and if you don't trade futures, you have two options, ETN wise. You have SGG, and that was pointed out. We had an official trade back here. We hit our first target quickly. I think it was the same day or next day, and then went on to just run our stop one day. So I left these up. I don't think I haven't done an update to that trade since. Might still be listed as active, but if it hit the final stop or the suggested stop or the final target, then the trade stopped out. But officially. But I've maintained that I liked it all along. We went down. What happened after that is we took out this beautiful bullish falling wedge. Very steep wedge, nice breakout there, impulsive follow through, went up, hit that level, and it's just been stair-stepping higher recently. T1 was around $37. That was resistance before. Resistance once broken, acts as support, so it's been consolidating above that support level. Next target there, and next target there. Again, I'm looking at this one as a potential longer term trade, and that would be, if it gets up to that $47 level, that's about another 22% from where we're at right now, and it's already rallied off the bottom to that recent high about 32%. So constructive price action, bullish price action, and constructive charts in a lot of these commodities recently. And your other option for sugar, other than futures or SGG, is cane. Pointed out this head and shoulders or inverse head and shoulders bottoming pattern recently before it broke out. We have a left shoulder here, a head, a right shoulder, and a neckline. And that's your breakout right there. We had an initial rally up. It's been consolidating, just like the other ETN, SGG, kind of in this area here. Next target, I'll have to sharpen. These are old support and resistance levels, so disregard these for now. And just I'm considering this as a viewing this as a trend trade, and really ideally it should stay above these recent lows right now, and it also needs to break above the recent highs, or at least that downtrend line. So as far as objective entries, I don't see a hard level right there, but I would say a pullback to about that level, about 550, about 560 or so. If we get a pullback to that level with a stop somewhat below, or a breakout above, maybe as early as this downtrend line, or you at least go over these recent cluster of candles right here. I'd say that should do the trick. Let me show you the charts of the 60-minute chart of sugar futures. Okay, if you trade futures, the symbol for that is SB, and we have this. Here's that recent consolidation area, so you can see a pretty well-defined downtrend line. That's why I think a pop of that downtrend line should do the trick to spark the next wave up. It's been consolidating since. Again, it's had a healthy run up, digesting the gains. Support here around the 1171 level. We had a little pop below it briefly there, but other than that, it's done a pretty good job. So again, if you're looking for this one, you can buy it down to around that level with the stop somewhat below. Certainly shouldn't take out that reaction lower. That's not going to be a good thing. And otherwise, so an objective long here or here on a break above that level. Next up is corn. We're looking at a weekly chart here. Right there, the continuous contract futures going all the way back to the late 90s there. So you can see kind of the bigger picture in corn. And like everything else, back in the 90s, early 2000s, this is where corn traded. It was down around these levels. Over time, you have inflation. Prices typically go up. And so corn in recent years, since about the the mid first part of the 2000s, right there, about 2006, 7, started forming a support zone right here, and that's it. So this is where corn has provided objective long entries for all these rallies on pullbacks to this level, and it's been holding above that level for a while now, and just recently hit the bottom of that support. Let's see, I have S1, S2 right here. That's support 1, support 2, the bottom of the support zone. So it was pointed out there was an objective long entry, and I think still is. We reversed off the bottom with some nice positive divergences in place. Let me flip that. Let me get these divergences. I'm going to put these down on the bottom. There we go. That looks much better. Kind of distorted some of these, but you can see. So there's the divergences, and again, that's setting the stage for potential major bottom, possible trend reversal in corn. Like we had this divergent high there that told you heads up. That rally's probably coming to an end, and it did. And that was your chance to get out. You had negative divergence too at that high, and that one right there. And so this is it, big divergence. But the bottom line is this: this is a multi-year trading range. It goes all the way back to 2014, and that's where corn has been bouncing around. So at this point in time, there are some stopping points along the way, minor resistance, top of the resistance zone. I think corn will probably work its way up here and ultimately go on to break out based on the chart here. And so you could be looking at a multi-month, even a multi-year swing trade or trend trade position here in corn. And again, it's all about risk reward. So you go long here, you put a stop a little bit below those recent lows, or maybe even tighter because we already reversed off there, and you let it run. Do you put all your money in corn? No. Is it a small piece of the pie for a longer term portfolio? I think so. And another one I've left its levels up. This is corn, last trade right here. Got in a bit early. They just had that little stop rate right here. I think that's when they took that out, I believe. But again, constructive chart. Same reasoning for taking that. I can't even recall where exact. Oh yeah, we entered too early on that one. That's it. I pulled the trigger too early. It then went on to break out here, and I've updated it several times. I've just left that on from the last trade, but first target back then and still now is this trend line here. We have a little trend line, but other than that, I think it'll take the trend line out. It looks like it just broke out of a bull flag pattern here on this daily chart. Here, I'll show you what I'm looking at. See this little flagging type action right here. After that, a strong thrust up off the bottom. That was also a divergent low, about equal lows there, and we had a higher low on the indicators, and strong move up. These guys are starting to get some momentum. Little bull flag action, breakout today. So if it can power on through there, take out that trend line, I really don't see a lot of resistance until we get all the way up here to that target around 1422 on corn, and that would be let's see here, about 12%. And yeah, to get there, and I think we'll get a reaction. That's a pretty significant level, so I'd expect to get checked there on the initial tag, get a pullback. Again, if you're going for the long game here, you just ride out pullbacks. If you're an active trader, you book profits, recycle back in on a pullback for the next leg up, that kind of thing. Okay, here's one commodity that I'm not bullish on so far. Well, crude, I'm not. Crude, I'm bearish on. And this one too, copper. It's an industrial metal. We're looking at the daily chart of continuous contract, and you can see I had to use a parabolic trend line, because I couldn't use a straight trend line. This thing has gone parabolic here, near parabolic right there at this point, and a huge run. And this is almost an unnatural, this price action recently. I'll zoom in, I'll show you the chart of CPER, one of the ETNs that you can trade copper with. But what I'm seeing here, it's coming up to a pretty decent resistance level right here, about 285. We're not far from it now. Above that is somehow, if it happens to power on through there and take out that previous reaction high, about 298 is the next resistance, a pretty good resistance too. But based on where we're at, looking at the overbought conditions in copper, right here you can see how overbought we are. We were overbought there, we had a correction. Even though the bull trend continued, we were overbought there, we had a correction right here. So that's what I'm looking at. This one is coming up to offer objective short for pullback, and a break of the trend line should do the trick. Let me show you how you can trade that if you don't use copper futures. CPER. That's the best I could do on the trend line. I can't draw this charting platform doesn't have parabolic lines where you can change the slope of them, but you can see it fits pretty well there. And this is what I'm talking about. This is unnatural trading. These green candle like that. We're going to see probably a blow off top soon, and we're coming up to that previous reaction high. So copper, once this momentum trade has run its course, it'll probably get a pretty quick reversal, and a break of that trend line should do the trick. Pullback targets, let me give you a target right here. I think we'll come back to 1643. So I think you can start scaling it now. 18-ish is the resistance level. We're almost there now. We're at 1786. You could enter now, maybe a half position with a stop somewhat above there. Maybe wait for a daily close in case you get a big spike through momentum fueled overshoot with an intraday or end of day reversal, or even a one-day candle above there. I'd give it a little bit of room, again, because of the momentum that it has right now heading up to that level, and then short the second half once that trend line's taken out for a pullback there. That'd be a drop of roughly 8% or so. Here's a 60-minute chart of copper. If you're going to trade the futures, that's HG. You have this is a more significant trend line, more reactions there. Here's a little minor trend line which just broke. I can't make a screaming case. It's getting quite frothy, a little bit overbought. We don't have divergences. I always say they're not an absolute necessity. And this time we just took out the previous high there on this little blow off top, so you didn't have divergence, and you still had a healthy correction that brought us back to the trend line. And so the trend line, I think, is only a few percentage points below, but it's getting pretty long in the tooth. If it breaks, I'd be looking at a pullback to about that 271 level. Again, I can't make a case for a hard entry here. Maybe a partial position based on the copper coming up to that resistance on the daily chart. That'd be about a 4% trade. And depending on what the stock market does, because copper is also a play on economic growth, maybe just hold a position, let it run, trail stops down if we start to get some sell signals on the stock market. The FANG stocks, tech, and all those things I've covered before. In which case, like I said, at this point in time, I would, if that happens, you start to see the market reverse, then I'll look to add some additional targets at that point in time. I'm just kind of playing around with this chart as I do this, and could see that I'd probably add these two right there. And next up, I'm kind of just all over the place. I'm working off a watch list on another page with these ETFs, and then I'll go to the futures if they have them. This one doesn't. This is JJG. I mentioned several times recently. One of my favorites because it's one size fits all, or one shot covers both all three: corn, soybeans, and wheat, which all had constructive charts I highlighted recently. JJG broke out, beautiful little bullish falling wedge pattern, positive divergence down below, everything I like to see. Wash, rinse, repeat stuff. It just, again, I don't the risk of oversimplifying it. They all don't play out, but it just doesn't get a lot easier than this. Look for a little wedge, look for the buy signal on a breakout there, and boom, wash, rinse, repeat, comes back. Look for a divergent low, look for a trend line break, wedge pattern, breakout, and your next leg up. A little minor trend line break. So this one, was a well-defined trend line. There's your divergence right there, bigger divergence than we had on these past two times, and we hit the first target today. These are the targets I laid out before: 41.60, 43.50, and then this zone up here around $46. And so there's plenty of upside left if that final target's hit, about another 11%. And again, maybe more. Maybe this will be the one that marks a lasting trend instead of just bear market rallies, which these other ones were before. But bear market rally or not, it was 24% from there, about 12% from there, and I think we'll do at least that much again. This is BAL cotton. The chart on this one, well, it's clear it's in an uptrend, I can tell you that. We're coming up to some resistance. Not one of my favorites, but it's, if you're looking for different things to diversify your portfolio with, here's a little price channel. One strategy: when you recognize a price channel, trade it. Sell the rips up to the top of the channel, buy the dips down to the bottom of the channel, work your way up, or just put it in there and let it run as a potential bottoming play, like a lot of these commodities are, I think, at this point in time. Cow, this one has hogs and cattle. Live cattle and lean hogs, I believe, are the two that this tracks. I had the downtrend line, which we broke out of, had a buy signal, but we had I had this resistance level here I highlighted recently at 31.32, which has checked each rally so far. So basically, if and when we pop that level, that would open the door for a move up to some of these next targets up there. And here's soybeans, SOYB. This one was highlighted here on a breakout as an objective long entry on a breakout of this level, which we got. Impulsive move up, ran right up to that first target there at 14.19. Had the expected pullback, and there's the reaction off that level, and finally powered up and took it out. And so that opens the door. There's a minor, I don't know if you can see the line here, a minor resistance right here, but I think we'll continue on up here to this at least that 1474 level. I might even make it a zone right now, resistance zone. 1474 to 1485 plus the downtrend line all come in together. So constructive looking chart. Divergences have been building for a while, potential bottoming play. Looking for something like this there. I don't know how long we get a reaction, but if and when we get that and then break out, there's more upside potential for this one. So again, I'm looking at a lot of these as potential for bottoming plays. I was looking at it here, and doesn't mean I'm not going to look at it here. They turned out to be swing trades in the past when we've had these rallies here within a longer term downtrend line or downtrend. But again, if this trend line here is taken out, that would be the first signs that that the rally might be more than just a bear market rally, that it might be a breakout in the start of an early parts at least of a new uptrend. And again, you can see some potential targets there. That would be that 1683 level is about 17% or so higher. And for even more diversity, you want exposure to the agricultural commodities. This is your ETF, one of them. DBA, live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, and cotton, all in one. Constructive chart. It's not really taken off yet. Some of those individual ones are, and that's again why I keep highlighting this sector. But it's kind of basing right here. This is a nice little basing pattern. It needs to pop above about 1390. That should do the trick. You have divergence, which leads me to believe that it will. This positive divergence, just like you had divergence here, that was a catalyst for this rally. And so targets would be, as you can see marked here, these are the first two: 1467, 1514. But again, I'd be viewing this as a potential bottoming play at this point in time, as long as I continue to like what I see on the majority of the charts for these ag commodities. Keep in mind that they're all not going to go up at once. Sometimes when you have, for example, wheat and corn going up, that puts pressure on hogs and cattle, because that's an input to the farmers to feed their livestock. But there are times they can both move. But for the most part, when you're diversified like this, it cuts both ways. It's going to dilute your returns because you're going to have some winners and some losers. But on the flip side, you're not betting it all on one commodity, and so it also helps to minimize your losses. You're going to be, at any point in time, if some of these commodities are going down, others should be going up. And here's Joe. I believe this is an official trade, coffee ETN, kind of a wash, rinse, repeat thing. Keep buying it down here at this area here. We recently had a little whipsaw signal. So far a false breakdown because we recovered that 3060 level. We're right about it now. We're at 3050, close enough. Ideally it should hold here. We rallied up, we broke the downtrend line, we hit that first resistance level R1 and we pulled back. So ideally coffee should start to run up soon, come and hit this first target. If it does, that'll help firm up the charts. If not, we'll leave that stop in place, stop on a daily close below 29.10. You know, you win some, you lose some, but as of now I still like it. Still like it very much. In fact, because it's broken out and I'm seeing momentum in the sector, this is a better time to buy than it was right here at the first resistance level. It's more objective right now. I would like it even better if it can take out that previous high. That would almost certainly open the door to T1, and it would really firm up this whole chart and even increase greatly increase the odds that we're going to continue on up to at least T2. At that point I might start adding additional targets if that happens. You know, we've had some failure to start rallies so far, like this one, and then we went on, made a marginal new low, divergent low, and then it exploded. So if it happens to make another leg down, even if it takes out our stop, like corn and some of those others did, I will stay on top of it and continue to provide updates. And this is what coffee futures look like from a long-term chart. This is my weekly chart here for coffee. You know, big trends. Coffee is actually runs pretty good when it runs. You know, you have these downtrend, divergent low, big rally here, divergent high says get out, another divergent high, get out, divergent low, get in. Of course, get in on the trend line breaks, divergent high, and most importantly, or most recently, divergent low right there, and it's been stair-stepping higher. It was highlighted back there on a breakout above this minor downtrend line. I had my first target here for a 60% gain. That was hit back then, and as usual, you know, first targets hit, you tend to get a reaction, and that's what we had so far. So we've been stair-stepping higher, and that's why I really want to see coffee hold up below this previous reaction low, and that would likely start the next thrust up. We've already hit that target, that 140 target, so I think that opens a door for my next target up there about 170. And here's another one I've highlighted. If you want really a more broadly diversified exposure to commodities, you can go with GCC. It has cocoa, coffee, copper, coins, soybeans, cotton, crude oil, gold, heating oil, lean hogs, live cattle, natural gas, palladium or platinum, silver, soy oil, sugar, and wheat. So there you go, and it is in an uptrend. There's not much more you can say about it than that. There's your uptrend line right there. We continue to work higher. There's really not a lot of resistance up until you get to around this point here, so it's quite thin up here. A lot of upside potential on this one still in the near term. And look, if it does pull back, the trend line's not super well defined. It's fairly well defined, but you also have support about 1533 that should, quote unquote, should hold. A little bit of a divergent high right here. It's not confirmed yet, but that could play out for a correction. If it does, then I'll be looking maybe for a pullback to this level is offering an objective long entry. I'm going to give you actually more of a zone. I can see that's a support zone down to about 1515. That would be somewhere around there with a stop somewhat below for an objective add-on, that is. NIB, Cocoa, very busy looking chart. You can see all these past trades here, both longs and shorts. You know, here we shorted, looks like it was put out as a short trade. But right here, if you take everything away, and again, this is the ETN, so you want to look at the futures too, but you know, this is pretty much your uptrend line right here. I had a little steeper trend line. We're to that now, and we have potential divergence. This indicator is still heading lower. That's why I call it potential, not confirmed. If we can reverse here off the trend line and the PPO turns back up, makes a bullish crossover, putting in a higher low, then we're going to have confirmed divergence, and that could set the stage for the next rally. So, you know, case can be made, step in and buy pullbacks to the uptrend line and swing it. You know, at minimum, you're coming up. I can probably draw a rough channel right here, the lower point of a channel. You've had a couple spikes above that. So that would be a minimum target right there, I think. And again, the bigger picture is this thing is in an uptrend. It's been walking its way up. So you could put a little in there and hold it. Here's a commodity that bottomed back in 2017. It's been making higher lows since. And last but not least is wheat. I did an update this morning. Wheat's an official trade. I fired off that video yesterday about 3:40, about 20 minutes before the close, and then left for the day. Right after that, wheat went on and hit that right before the close, hit our first target there, 526. I think it hit a high or closed around 529 or so. So the first target's hit, and it just, constructive chart, same premise back here, positive divergence, rally. Positive divergence right here, rally. There's your divergence lines, and now we have positive divergence, and also at support. This 490-ish level where the stop is. Wash, rinse, repeat. Let's not make this any more complicated than it needs to be. Buy pullbacks to that level, go long, swing the trend. Sooner or later, bigger picture says that wheat may break out, so we'll be watching. If it gets up here again to that final target, I might extend targets and maybe raise the stop at that point somewhere along here, and hold and see if we can hold out for a breakout above this multi-year basing pattern right here in wheat, and hold on to that as a longer-term trend trade. And we'll wrap the video up with this long-term view. This is my weekly chart. Goes back to, late 90s here, 99, start of 2000 right here. And this is it. Wheat has been in a, longer-term uptrend over time. More and more people in this world, less and less arable land. Yes, there's some advances in productivity and all that, but, I don't imagine wheat going anywhere, getting any cheaper, or not being used. So again, this is simple stuff. You buy at the up pullbacks to the trend line, which were highlighted several times in the last couple of years. Pullbacks to that trend line, and last right here we had a small little divergent low, and we've been stair stepping higher since. So I think if we can take out right there, this is where we've been. That's that trading range I just boxed in on the ETN. It's about 600. If we can break that, break above that, I think it could run. Even if it just goes up there, it's another swing trade. We'll hit our final target on the swing trade, get out, and wash, rinse, repeat. We'll try to buy it back again, maybe even short it on the way down. We'll see. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.